What's up, crypto fiends? Average crypto investor, aka taxation is theft, here to talk about the recent executive order that came out in the United States. If you are unfamiliar, there has been a lot of discussion and rumors spreading around about the regulation that this executive order would bring. Well, it dropped on May 9th, and we are here to dissect the executive order and see what this actually means for the crypto market and United States regulation as a whole. As always, nothing said in this video is financial advice, and you should always do your own research before investing into any project. The executive order is broken down into 9 parts, each with a few subsections. We will break down each section and talk about some of the key points. The first section is policy. This is a rather short section, so just a few key points. First, the United States recognizes that the digital asset market capitalization has grown dramatically, from $14 billion in November 2016 to around $3 trillion in November 2021. Second, it states that the United States has an interest in respecting the benefits of digital assets, including financial innovation, access to affordable financial services, and modernization of payment services, while also protecting against some of the risks posed to consumers, investors, and businesses. All in all, nothing too groundbreaking here. The next section lies out the objectives of the executive order. The first objective is to protect consumers, investors, and businesses. No surprise here that crypto is a wild west and they want to protect those involved. To be honest, this is a good thing for crypto because some regulation will lead to a lot more trust and more inflows from other markets. The next objective is to protect financial stability and mitigate systemic risk. The important call out is that they recognize they need to have an evolution to a regulatory approach in order to address the crypto market. That's good news for us because it means they won't be applying some antiquated governance that doesn't really apply. The next objective is to mitigate the illicit finance and national security risks posed by misuse of digital assets. I in particular really like the word misuse here because it means the government is recognizing that crypto isn't primarily used by criminals, which has been the narrative for a long time. One of the biggest strengths the United States has to fight foreign entities is by restricting their access to financial institutions, so it makes sense they're concerned about that. I mean, just look at what's going on with Russia and Ukraine currently, and you can see how global sanctions affected their economy, and we saw inflows into crypto as a safe haven. The next objective is probably my favorite. It lies around reinforcing the United States leadership in the financial system and in technological and economic competitiveness. We have seen many other countries picking up the banner here when it comes to cryptocurrency, and the United States could really bring a lot of attention with the right policies. The fifth objective is promoting access to safe and affordable financial services. This is often one of the most missed use cases of cryptocurrency, but it allows cross-border payments for a small percent of what it normally costs. In addition to that, many Americans are either underbanked or unbanked, and cryptocurrency offers a way to bring financial equity to them. The last objective is supporting technological advances that promote responsible development and use of digital assets. The most interesting part for me here is around the negative climate impacts. I think if the United States committed to some renewable energy to support cryptocurrency, we could see some real positive growth within that sector. The next section is around coordination. This is another short section that names lots of different departments and organizations that will help carry out this executive order. The two that are the most worrisome for me are the SEC and the CFTC, which is the Securities and Exchange Commission and the Commodity Futures Trading Commission, respectively. Both of these have a lot to gain with tough regulation on cryptocurrency and don't have the legislature to back them regulating the markets appropriately. Section 4 revolves around the policy and actions related to the United States Central Bank digital currencies. There's been a lot of discussion online around the pros and cons of a CBDC, but I'm personally not a fan. One of the benefits of cryptocurrency is the fact that it is decentralized, and creating a centralized authority to govern a token such as the United States could be harmful to the sector. This is a rather wordy section that doesn't say much except for the fact that in 6 months from this order, the Secretary of the Treasury needs to deliver a report to the President about the future of money and payment systems. This would include the potential design of a United States CBDC and how it would be implemented. If you would like me to explore what this report contains, make sure to like this video and subscribe with the bell notification turned on so you can be alerted when that video goes live. Section 5 revolves around protections for consumers, investors, and businesses. In the same vein as the previous section, this asks for a report to be delivered to the President in 6 months. Again, this is an interagency report that includes my least favorite agencies, the SEC and the CFTC. One of the most interesting tidbits within this section is the request for the report to contain potential uses of a blockchain that could support monitoring or mitigating technologies to climate impacts. This might be a huge boom for some private sector companies who are already within this space. Section 6 is actions to promote financial stability, mitigate systemic risk, and strengthen market integrity. Again, the SEC and the CFTC are named in this section. This section calls for a report to be delivered in 7 months to call out any specific financial stability risks and regulatory gaps. This may mean that we see new crypto regulation coming down the pipeline in early 2023. I don't think this is entirely a bad thing, as a base level regulation would increase investor confidence, but it certainly does pose some risks to investors as well. Section 7 addresses the government's favorite boogeyman, national security risks. This calls on the Congress of the National Strategy for Combating Terrorists and Other Illicit Financing to submit a report in 90 days about any illicit finance risk. I think this is one of the more understated sections of the executive order, because this could bring a whole new wave of KYC requirements outside our US-friendly exchanges. Looking at you, KuCoin. Section 8 is policy and actions related to fostering international cooperation and United States competitiveness. This section calls out countries with inadequate AML and CFT regulation and enforcement, which could mean some incoming friction for cryptocurrency payments down the line. However, this section also reaffirms the United States' commitments to the G7 group and the G20 roadmap. This may be beneficial to crypto holders as well, since there are a few countries in there that have enacted very favorable crypto legislation, so time will tell. The last section is Section 9. This section covers definitions from within the executive order, although not exactly in layman's terms. For example, Section D starts by defining digital assets as referring to all CBDC regardless of technology used, but then goes on to say, for example, digital assets include cryptocurrencies, stablecoins, and CBDC. Bureaucracy at its best. So what did you think of the President's executive order? Do you think it's bullish or bearish news? The market seemed to think pretty favorably, but I'd love to hear your opinion down in the comments below. If you learned something today about the executive order, give me a like to help others find this. If you want more of this type of content, make sure you subscribe with the bell notification turned on. That's all for now. Stay safe, and don't worry, crypto fiends, we are all going to make it.